I've been telling you, S&P is going to make new all-time highs. And again, I talked about the triangle here. Recently, I talked about the bounce off the 50 period and horizontal support. We were just above that level, and we bounced off that 50 period moving average. We saw our signals turn back to bullish with the presidential election results. And again, we're now getting the awesome oscillator going in positive territory. So we're going to be watching to see if we complete a divergence on the awesome oscillator and a divergence on those 60-minute charts. S&P is within striking distance of the monthly trend line at 6,000. My target level is that trend line. Show it to you. Watch the video all the way through. We are about to reach it. We are within 0.30% away from reaching 6,000 from today's intraday high. Less than 0.5% away from it on a closing basis. Reach that 6,000 level. We very well could. Again, look at, we're moving to a new high. The awesome oscillator is not. I've talked about this at great length and detail that a divergence could develop here. I talked about the triangle possibly having an upward resolution. We saw a downward resolution, and we saw this dip negative briefly, but now turning back up, and it's forming a divergence right now as we go back and get a lower tower here. So it took a little bit different path. It's still getting us towards my target level, that 6,000 area in the monthly time frame. Watching the divergence here, and on the 60-minute charts, watch this all the way through. You need to see what's going on. How to do it: hit the target range. Talking about who's going to make new all-time highs as NASDAQ goes back and fills the gap. Well, NASDAQ filled the gap. Now it's overshot that level a little bit. But I told you, again, there's not enough evidence that the reversal was here, and I told you we'd likely bounce here off of our 50-period moving average. Over the weekend, told you that on Monday and Tuesday, signals were suggesting we were going to get a presidential rally or a Fed rally or both, and that's what we're getting, both. We start to sell off tomorrow sharply. We'll be watching the weekly charts. Do we start getting topping tails and that's it? Or do we reach that 6,000 area on the S&P? The NASDAQ, we gapped higher again. And again, look at this. We're moving higher, and we even moved above the July peak, but the awesome oscillator's not. It's not moving higher. It's forming a divergence. We had a divergence right here on the awesome oscillator that gave us this pullback to the 50, and now it's evolving into a larger divergence here. And again, we're at some resistance levels right now. We might overthrow those resistance levels. You got to see the 60-minute charts. Watch the video all the way through. But again, this is warning. Hey, we're setting up a divergence. Indicators are warning the rally is not going to last. And again, we're going up and slamming up into my target area here on NASDAQ, and the S&P is just below the 6,000 area. I don't know if we reach 6,000. We might come just shy of it. Right underneath it, we're just below 6,000 by 0.3% of the intraday high made today. We'll be doing the same thing as NASDAQ and NVIDIA, possibly a double top if the breakout fails. NASDAQ just broke out. Breakout fails, we could have a double top. Both Bitcoin and the NASDAQ, they peaked together in November of 2021. Will they do it again in November of 2024? And again, VIX got that big drop of 20% yesterday down to the 200. We're dipping below it. I told you to be watching to see if we drop below the lower band here, back to the 200, taking out the 50. We got that move back up on the presidential rally and on the Fed. We talked about that before the rally took place. The problem is the 50, the green line, is still above the 200. They got a bullish cross back over here. That's the problem. It's warning, hey, witnessing a topping process. Most people recognize it because, again, it takes its time doing what it's going to do. If we continue to see the VIX dip a little bit lower, we can see the S&P reach that 6,000 area. If we turn off the trend line that we're reaching right now and we start to turn down and maybe start trying to get a topping tail by Friday's close, then it's possible we don't reach my target level of 6,000. But again, you can form a divergence on the 60-minute chart. You'll see it in this video. We're at extremes right now. If we pull back, we could still go back up and go slightly higher and form a divergence in the next few days. Exciting. About to reach that monthly trend line. It's close but no cigar, but you got a shot at reaching that 6,000 area. Get in the video. Support the channel with the link directly below. That allows me to be able to provide you this information. If you follow the link, it'll take you to a secured site. You can donate any amount you want. I ask that you partner with me and help out because I don't have sponsors. I turn those offers down because I don't want to sell you stuff. Need your help in order to make it work. If you can partner with me by supporting the channel today, I would really, really appreciate it. I thank you for that. Okay, we had the Fed meeting. The Fed cut by 0.25% as expected. The Fed still talking about a soft landing, but Powell showing concerns, as he's done earlier in the year, about the labor market. Fed actually did the cuts, trying to talked about justifying them keeping the economic expansion going. Really doing it because they know a recession is coming. You just can't come out and say that. Continue to say we're going to have this soft landing. We'll see as we move into 2025, that's not going to be you'll drop by about just under 2%. Now, I failed to mention in yesterday's video, we had this jump. You know, the stock market jumped with the election results, but so did the 10-year Treasury, so did the dollar. We got above this trend line. Now we're pushing back below it. We just had an overthrow to it here, and we got this topping tail yesterday. We have the Fed continuing their rate cutting campaign. Again, we're moving off of these levels. I told you this would eventually happen. Well, that will turn off this trend line, but we did overthrow it yesterday, and eventually we're going to go down. Market currently has a short-term negative correlation. Had that rally yesterday with both of them. So again, we'll see if this goes back into a longer-term positive correlation, but the 10-year is going to start falling and eventually come back and take out the September low here. S&P will soon follow. Again, we're right underneath my target level of 6,000 on the S&P 500. NASDAQ are playing catch up to the Dow. Remember, the Dow was up over 3.5% yesterday. It had the best day in 2 years. It was flat today. It was down just about half a point. The S&P 500 playing catch up. It was up 0.75 of a point to up 44 points. But look where it's at, 59.73. The level I've been telling you about is at 6,000, the low 6,000 area in the monthly time frame. The rally continues. Again, I've been talking about the target, the low end of the target, 57.50 to the low 6,000 area. We're just underneath that now. Maybe we don't make it. Maybe we overthrow it. We can go overthrow it and go as high as 6,100. But again, time to pay attention because we're at major resistance here in the monthly time frame. NASDAQ up. The VIX was down 6.5%, down here to 15. Again, we had a drop yesterday on the VIX of greater than 20%. That tells me historical data suggests within the next two sessions, 95% chance we will have an update, on the S&P, a top or a short-term sell-off. So VIX was down so sharply, it will get a bounce or a bottom. Get the sell-off today on the S&P, and the Dow is flat. So again, there is a 95% chance of a down day on Friday based on the historical data of the VIX. 5% chance that fails. So again, we'll see what happens. Probably, I want to remind you, up at these target levels, the S&P is just under the 6,000 area. We are within striking distance of it. Major trend lines of resistance. NASDAQ's up at this trend line right now in the monthly time frame. When I called the July peak, I told you I thought it was a top based on tagging this trend line. Now, I was wrong about it being the top, but I told you my reasons why. This trend line, the weekly trend line, well, we're slamming up into both of those trend lines again in the weekly time frame. The channel from the pandemic low, I'll show you that. And here in the monthly time frame, again, this longer term channel going all the way back with the history that we have on NASDAQ 100. We're slamming right up into this perfectly parallel channel from this lower boundary. Possible we overthrow the trend line a little bit, but unlikely we'll be able to stay above it. We may just turn off of it immediately. Now, last time we tagged it, let me bring it up close here. Again, I told you I thought that was a top. We got a topping tail. We got all kinds of sell signals in the weekly time frame. In the monthly time frame came down, but now we've come right back up to it. Again, we're slamming right into it. Again, we might overthrow it a little bit. We might right off of it like we did here. Again, it's perfectly parallel with the lower boundary. Eventually, I think we're coming back to this dotted line down over here, likely by late 2025 or on into 2026 for the bear market to take out the pandemic low over here. But you can see what I'm talking about, what I'm looking at. Okay, and we have this big rally back up. Looking for a big rally back up to fill the gap at 20,400. I told you I thought we'd get a lower high just below this level. I told you if I was wrong about that, we'd slam up into the trend line again. Well, I was wrong about that being the top, but we're slamming up into the trend line again, as I told you would happen if we moved above the July peak. My reasons why I thought that was a top, just like again, I'm still looking for a top right here, again, at this trend line. Here we are in NASDAQ slamming right up into it. Week's rally, the presidential rally, continuing with the Fed. And I told you at the beginning of the week, before we had the rally and over the weekend, again, we were at key support, 50-period moving averages. And I told you we can get a rally back up to back test the trend lines on the S&P. We did. NASDAQ would get back above the broken trend line, go back to fill the gap. We could either fill the gap, wrong about the July peak being the top, then we could try to move back up to this trend line right here, which we're slamming into right now this week with today's rally. 100 monthly chart here. So that was the July 2024 peak. I'll put a new marking on here for the peak that develops. Do get a peak here in November, and we'll see in the monthly time frame. Do we get a topping tail by the end of the month? Very well could. The month was very, very young. And the VIX is predicting a down day for the S&P 500 tomorrow. We'll see if it's correct or not. It's not always right, but again, 95% chance. The probability is pretty high on that 20% move that we got on the results with the presidential election. Now take a look. Again, this is the monthly chart. I've talked a lot about this chart. I talked about the trend lines here. The red one excludes the shadow from the 2000 top. The black one includes it, and that was my target zone. It's between 5750 and the low 6,000 area. It was below, just under 6,000. Now it's above it because the further right you go to the chart, the trend line goes higher. We moved into a new month in November. We're watching now just above 6,000. We're almost there. Will we reach it? Could even overthrow this level just a little bit. That is possible. But again, let me show you this up close. It's highly unlikely we're going to get above this trend line and just keep going in this new bull market. We're going to have the recession. Now, President Trump, as he's coming into office, he'll inherit a recession, but he can do things to shorten it, make it less painful. You know, he talked about no tax on tips. He talked about trying to remove the tax on Social Security, taxing overtime. These things can help during the recession, along with good economic policy, but it's not going to stop the recession from happening. Again, we could see the recession begin to be hit, 6 months or so just before that, or just after that, maybe 9 months or so from our signals were triggered. So again, it could hit the first or second quarter there in 2025. S&P monthly chart. This trend line, black trend line right here, we've already hit the red one at 5750. We overthrew it. This one includes the shadow from the 2000 top there. We're just below it. If I bring it up close, it looks to me, just eyeballing it, it looks to me like right around the 6020 area, just eyeballing it, looking at it, right around 6020 area, give or take, just below 6020, right around 6000 to maybe 6040 if we overthrow it just a little bit. But it looks like it's coming in, like I said, right around that 6000, 17, 15 to 20 area, just eyeballing it. Now, if you look to the right, as I touch the bar up here, or touch the trend line up here, you can see, let's see if I can get it as close as I can right here. It looks like right in there, 6017, 18, maybe, let me just go, if I just go right there, 6023. So again, right in that neighborhood, 2017, 18, 6023. Maybe just a little shy of that, maybe a little bit over to the 6040 area, but in the S&P 500 weekly time frame. Again, we had this divergence here at this peak right here. Okay, it formed a divergence, and I told you if we rebound back up off a horizontal support in our 50-period moving average, remember we talked about that bounce off the 50-period support at the July peak over here. I told you if we bounced off of this level, we didn't hit the horizontal support, we were just above it. I drew that a little high. but we did bounce off the 50-day moving average in the daily time frame. And again, we got this bounce. I told you if we did get it, we can go up to the upper boundary of the channel, but the divergence is developing. Here we got a lower high for this peak. Here we got a divergence at the 2022 top. Here at the 2020 top, and again, another divergence. Here's the bullish divergence at the bottom right here. So again, divergences have marked major turning points. Couple tops, a bottom here, the lower high, a short-term peak for a pullback, and now we have this major negative divergence developing. It's likely, again, we are forming top that, again, this time it's not going to give us a correction like in 2022 or 2020, but it's going to likely terminate the bull market because we know the recession is coming. Now had the uninverting of the yield curve and the Psalm rule has been triggered. We didn't have that happen. These other major sell-offs over here and this correction over here now have it. Again, I've talked about this trend line right here. Again, we came right up to it here about 3.5 weeks ago, and we turned off of it, okay? I talked about bouncing off the 50-day moving average in the daily time frame and coming back up to this trend line if we back test the trend lines on the rising wedge. I talked about those two trend lines. We've now done that. We're back testing it, coming right up to this trend line right here and overthrowing it. I told you we could overthrow it. NASDAQ overthrew the trend line there, the July peak. Something interesting to show you about that in just a moment, but we're overthrowing it right here. And again, look, the RSI is not moving above this previous peak. We're getting a divergence right here in this most recent price action, which I talked about before we ever got the rally. We talked about that possibility if we rallied and support held. I told you I was expecting that back test. We got it. Look at the MACD. It tried to roll over at the beginning of the week. I told you if we get the rally, then it will be prevented. It is being prevented from that happening. You still have the divergence, the triple divergence here. That's, I mean, again, we may overthrow this one. Both of them carefully. We'll see. We close back below this one by Friday's close. Again, we have a perfectly parallel trend line. I have changed the trend line to exclude the shadow right here. I included it before, and we just, with this peak, overthrew it. But if we exclude the shadow right here, and we connect this point with this point, we're slamming up into that trend line right now. Now, again, maybe we overthrow this area a little bit. Previously, we did overthrow this as I drew a perfectly parallel trend line from each of these lows over here from the pandemic low and the October 2022 low, but you can see, again, a nice looking channel. Now, the channel I showed you in the monthly time frame goes all the way back to all the data that we have on the NASDAQ back into the 80s. The channel is from the 2020 bottom and the 2021 peak. And again, you connect the dots, you have a parallel channel excluding those shadows, then we can include the shadow here, and we're slamming right up into that trend line right now. Now, again, we had a class B divergence at the July peak. We had almost two equal peaks there with the indicator price went higher. We have a class A divergence where we're getting a higher high, but the RSI is not moving to a new high. So again, interesting there. And again, we bounced off this blue trend line. Eventually, I think we're going to reverse. We're going to come back, take out the 20-week, and take out this trend line. I think that's going to be it for the NASDAQ once it completes that top. I told you I thought the top was here because of these trend lines intersecting, because of the monthly trend line I showed you, because of the sequence counts that were forming right there. I told you if I'm wrong about that, which now I was wrong about that because we moved to a new high, but I had good reason to think a top was right there. Just like I think, again, and I told you if that's not the top, and if we do move to a new high, I told you to be watching the peak right here. And we're way up. NASDAQ right now is up 5.33% this week. It's up 1,068 points. Got above 21,000, moving just above this 20,700 area. Also seeing a divergence develop on the MACD. It's making a lower high as prices is moving higher. So again, we are forming these divergences on the RSI and the MACD. We're up 5.33% for the week, up over 1,000 points above 21,000. And by the way, the S&P for the weekly move up 4.26%, so 4.25% there, and it's up 144 points again. So again, we're going to be watching these weekly and monthly charts very closely. I told you we can rally on the S&P back up into this level because I told you we're bouncing off support in the daily time frame. And again, if you look at the daily time frame, I talked about the trend lines being back tested. The one including the shadow, we've already come back above that level with the presidential rally. I told you that we could back test one or both of these trend lines. And again, if we we could move to a new high. I told you there was not enough evidence to show that that was a top, even though we had a divergence. And again, we bounced off support. We bounced off the 50. We could not take these levels out. I talked about how we got, with the break of this trend line, there was no confirmation. We broke the trend line. There was no confirmation, no follow through whatsoever in horizontal support break. You got to have confirmation and follow through. And I talked about with this trend line right here that we broke the trend line and we got a confirmation bar, but there was no follow through. You didn't break support. So again, this trend line break did not prove that that was a top. There was no confirmation and follow through, just confirmation on the other break, neither. And here we've come right back up to this trend line. I talked about back testing this trend line. We've come right back up to the apex of the rising wedge here, just slightly overthrowing it. And again, MACD is turning up. I talked about, possibly another reference point of a divergence. Maybe we get a brand new reference point, brand new divergence developing. We'll see. But a 6,000 area in the monthly time frame as we've come back up here. And look at the gap here with the presidential election results. And then again, another gap today on the S&P. Now take a look. Coming back here, take a look at SPY. This is the S&P cash right here. Trend line on the SPY tracking ETF fits a little bit better here. Again, the breakdown, the back test, and then now we're back testing this level again as we approach that major trend line. So again, don't reach 6,000. Maybe we're just shy of it. This is predicting a down day. Maybe we hit it and we reverse and get a topping tail. We hit 6,000 or don't hit 6,000, which would be the 600 area here on the SPY tracking ETF. Good chance see a sell-off just under that level where we're at right now, or right at that 6,000 area or 600 area here on SPY. Major resistance in the monthly time frame. And again, I wanted to take the time to show you the divergences in the weekly time frame, trend lines in the weekly and the monthly time frame. Here we are, we're there. So again to the S&P cash, we had a high, an intraday high at 59.83 today. Go up 0.5%, that gets us to the 6,013 area from today's high. Now we closed 10 points under that, so it'd be a little bit more percentage wise, but I'm saying from today's intraday high, if we were to try to reach 6,000, we're only 0.3% away from that based on the intraday high. A little bit more than that from the close. Just over 0.25% away to hit 6,000. We go towards that trend line that I showed you, you're about just over 0.5% to reach that level. So we are within striking distance if we're going to reach 6,000. And if we're going to try to reach 600 on SPY. So again, I'll be watching. Do divergences now develop here? Turn off this trend line and that's all she wrote? Or do we try to reach that trend line in the monthly time frame? Do we try to reach 6,000? So we're back testing this trend line at the moment. Maybe we get above it to reach the 6,000 area. We'll see. But we're back testing this trend line. I don't know that we can clear this level, but if we do, you have 6,000 area directly above, and maybe we get closer to this trend line right here, the upper boundary of the rising wedge. I don't know if we reach that level, but again, we're struggling at this trend line, and again, it's probably a little bit better seen here on the SPY ETF right here. So again, we'll be watching. But we reached 6,000 or 600 on SPY, but we're pretty stinking close. If the rally continues tomorrow, it may try to reach it. Maybe we get a topping tail and we go up there, but then we start a reversal. We'll see what happens. We just turn off the trend lines here, and that's all she wrote. But again, we're at major levels of resistance. It's time to pay attention. People are asleep at the wheel, man. Talking about S&P is going to reach new all-time highs. S&P is going to go to new all-time highs as NASDAQ comes back and fills the gap. NASDAQ did that. I'm looking for a topping process. As S&P is back testing this trend line, bouncing off the 50 and horizontal support, NASDAQ is doing something else. Now, this is the S&P 60-minute chart. It is extremely overbought here on the RSI in the 60-minute time frame. Could be we still form a divergence here, that we come back down and go up a little bit higher or get a lower high, but again, good chance you're going to see a divergence, a brand new fresh divergence develop here if we do pull back after the Fed meeting here on Monday. Watching for a possible divergence to develop, counting the trend lines that I'm showing you. We're right at them. Again, could overthrow them a little bit, but be watching this 60-minute chart with the RSI and the MACD. Again, could do the same thing. We'll be looking to see if we start a pullback Friday or Monday. NASDAQ's already right into these resistance areas. S&P on the monthly chart is just below it, and it's already at the resistance area, line of resistance, and overthrowing it there in the weekly. Keep this in mind, and that we're at extremes as I show you another trend line I'm looking at. We got a little doji, by the way, on the 60-minute chart here, the very last bar. So it'll be interesting to see if the doji gives us some kind of pullback here, the hourly chart. Now let's take a look at the daily. Again, I showed you this trend line yesterday, the trend line I'm watching. Again, I connected the dots with these trend lines right here, and we pushed up above that trend line when we moved to a new high above the July peak. This trend line connects this peak here, like the S&P, the same trend line I previously had, connecting that drop that we had, that gap lower in July, mid-July there, and then connecting it with this peak right here, and we're coming right up to that level right now. Now again, rising wedges, you can overthrow them. You may see the S&P try to reach 6,000, below it right now, but again, you've got the divergence here on the MACD. Now the RSI look to be moving to a new high. Now it doesn't have to form a divergence. Down here we moved to an extreme to mark the bottom. There was no bullish divergence to mark that bottom. You don't have to form a divergence. Oftentimes you do. With this peak right here, that we had, we did have a divergence. Point gave us a pullback. We broke this trend line. Again, what do you have to have? Confirmation and follow through. There was no confirmation whatsoever to that move. We didn't close below it. You never got the follow through, and we bounced just above our 50-period moving average. So again, the rising wedge pattern be expanding. So I've drawn the trend line from this low, not this low, but this low right here, and then again from these highs over here, and that's where we're coming in right now. So we'll be watching to see, does that trend line hold? Do we overthrow it a little bit and then come back down? But again, still got a possible double top. I told you I was looking for a double top with a lower high originally because I thought that the trend lines on the monthly and the weekly time frame would hold on NASDAQ. That wasn't the case, but I'm looking for a double top here. And again, times you often get a double top where you go slightly higher. And we know that NVIDIA is doing exact same thing. So is Bitcoin. All form double tops, and the breakout up to a new high fails. We start dropping back down and break this trend line and start seeing, again, the weekly signals begin to play out, pushing off monthly trend lines. Then again, you very well could have a major top. Recession is coming. It's going to be very difficult to have continuation of a bull market with the economy going south. And again, the market will begin to price in a recession. It can't happen. We have good economic data for the most part. Well, markets top on good economic data. Bottom on bad news, top on good news. Is moving to a new high. The MACD down here is not moving to a new high. The RSI is moving slightly higher, it looks like. MACD still has this divergence. And again, we don't have to form a divergence on that RSI. Again, a trend line I'll be watching, or if we overthrow it. But again, likely the rising wedge is still in play. It's just the boundaries are expanding without confirmation here and then pushing above this trend line right here. Showed you that 60-minute chart up close a moment ago. NASDAQ was up 320 points today. It was up 1.54%. Again, playing catch up to the Dow. The Dow was flat today, and it outperformed NASDAQ. NASDAQ lagged the Dow yesterday. NASDAQ playing catch up. Again, we had a gap higher yesterday, another gap higher today, but we're at extremes. Again, we could see something very similar to what we had over here at the July peak. We had a peak. We turned back down. This is interesting. This is about 3 or 4 days. Right here was leading up into this peak right here. This was the 5th, the day after Independence Day, the 4th of July. Then we had the weekend. And then we had the 8th, the 9th, and the 10th give us 3 days of this price action that formed that divergence right there. But leading up into it, we were rallying up into it on the 5th. So again, it took about 3 or 4 days to complete that divergence to give us the peak on July 10th into the trend lines. Here, again, we've reached extremes. Very similar to what we had over here. If we start turning back down, could be we come back up. And look right here, we had a peak and we just went slightly higher than that peak, just a little bit higher. We could see something like that. And that was it. That was all she wrote. And we ended up dropping 16% real fast. This one's likely going to produce a reversal when it's done. We have a rising wedge that's going to give us a reversal. We'll likely come back and end up taking out that August low and see the market's top based on the trend lines I'm showing you in the weekly and the monthly time frame. But we could see a divergence, something similar to the July top. And again, you can see the divergence over here. Took just a couple of days right there to form as well. Could be we see divergence develop here over the next few days, few trading days, if we start to sell off and then come back up. I'll be watching the extremes on these 60-minute charts. And we don't have to move to a new high. And keep in mind, one thing, oftentimes, NASDAQ and S&P diverge from one another. Okay, we had that back over here at the July top. NASDAQ got a lower high, got a higher high. So again, we don't have to form a divergence here. We could just confirm a lower high. Maybe they both end up setting up divergences as well. So just keep that in mind. That's some major resistance in the weekly and the monthly time frame. Upper boundary on the rising wedge, we're right slamming up into that, which is the trend line right here. So again, here we are. We'll see what happens. If we zoom out on the 60-minute chart of the S&P real fast, again, we're up here at extremes. I told you about those bullish diversions down here. Remember that? Before the rally happened, I told you that's likely going to give us a presidential rally or a Fed rally or both. Back test the trend lines. But I talked about that before the rally happened. Horizontal support. And just like at the July peak, NASDAQ over here, we got a divergence that developed as well. Maybe we see that happen again. Over the next few days, we complete it. If we do, we can reverse off major resistance. And if we do go a little bit higher above the back test of the trend line, again, it's a little bit different because it's a 60-minute chart. I've just excluded the overthrows, but you saw it in the daily time frame. And again, we just overthrew it just ever so slightly. Could we reach that 6,000 area if we do get above the back test of the broken trend line? We'll be watching. Or maybe, it's close but no cigar. We'll be watching going forward resistance levels.